Hello, this is Victor Santana with Stock Hunter Video for March 28th. How's everybody doing? Hope everything's going fine. Let's go ahead and take a look at what's been going on with the market and see what the market's trying to tell us to do. So let's go ahead and go into looking at the charts here. So here we go. Alright, let's go ahead and first go to the U.S. market here. Just kind of puts all the indices together here. Gives you a broad overview of how the whole market is doing. And as we could see here, we are topping up here. We're having trouble breaking up higher. What I have on the screen here is the Bollinger Band, the 18-day, and the green and yellow line here. Those two small ones here are the short-term trading signals, while these thicker lines are the longer-term trading signal lines here. So this kind of gives me an idea how the overall market is in the bear or bull market mode. Right now we're still in a bull market. However, as you can see, long-term it is getting a little flat here, and so things could be getting neutralized. On the shorter time frame here, as you can see, the 3-day moving average exponential is getting ready. Look like it wants to cross over under the 13 exponential moving average, which is not a good sign, at least for the short term here. As you can see where it crossed over here, we got that buy signal short term and rode the wave up. Now the party may be over, but we'll have to wait and see and what's going on. Let's take a look at the weekly here. You can see the weekly here, the 14 exponential moving average for the week. It's been up, and as you can see, we are way up on this area. We're getting topping tails, these little wicks coming up here, which usually starts to appear at a pullback. So how far back we're going to go down, we don't know. Our job is not to guess it, just to ride the waves as we see them. So right now the waves look like they're getting ready to top off here. So that's as far as the weekly here. So let's go ahead and dig down into the individual indices and go from there. Let's go ahead and look at the Russells here. Usually the Russells are the leading indicator of how the markets are doing here. We're looking at the weekly. As you can see with the weekly, the trend is still pointing on the upside, but we did get these two long topping tails here, which is indicative of the trend getting tired. So just a word of caution there. Let's go down to a lower time frame of the daily. And here you can see the daily. 3 days it's been going down here, getting lower lows. So there, if we break down in this area here, let's say 66.78, then we would have to consider getting these inverse ETFs to short the market, maybe probably down to this area, here. So we're just going to have to wait and see. As you can see, the longer term is still on the up here, but short term here, it is now at signal to get out. As far as the Russell, these are the weakest ones. So let's look at the NASDAQ, the QQQs. And this one has not crossed over yet, but it is starting to look a little weak here. And down here you can see the longer term, it's still trading fairly flat. So we'll just have to wait and see. The momentum indicator is showing the momentum slowing down. So word of caution to be careful here. And now let's go down up to the SPYs on the daily. And as you can see, the SPY also, you could see short term, the market's getting tired. We may be headed down. Long term here, these are getting narrower. So this is something to be concerned of. See if they cross over, we can see some trouble. Looking at the momentum indicators here, we are slowing down, so definitely be prepared. If you have some longs in here, tighten them up. to maybe the lowest of the last 3 days, or the 5 days at the most. So in this case, with the 5 days, you'll go 1, 2, 3, 4, 5. You would have your exit right around here, 115.20 in this area here. To be more extra conservative, 1, 2, 3. Since this is the lowest of the third day here, if it breaks under 116.12, exit, because we are looking pretty close down here, getting ready. So that's the SPY. Let's go ahead down to the Dow, which has been the strongest of them all. And as you can see, it is now curving slightly here. We're getting these topping tails. Now, here's a very interesting thing here in the long term. We're starting to see that they're going to get ready to converge here. So there's going to be a lot of indecision as far as which way the market's going to head down or up. Better step on the side for those that want to play it safe, or consider getting some inverse ETFs, probably at 107.85 range in this area here. Okay, now let's look at the global markets. Overseas, as you can see here, this is what concerns me here. As you can see, we already got the crossover of the 50-day moving average and 100. So we are now in a bearish tone here for the global market, believe it or not, based on the stock hunters trading system here. Short term here, we did get, even though we got the long term crossover, short term was still an upturn here. It's now time to get out. So if you're fast and nimble, you want to follow this short term signals here. If you're more of a longer term investor here, right now step aside from the global markets, at least global in general here. And you can see we are getting a triangle wedge coming in here, forming, and these topping tails. So we may break down to maybe as far as low, at least for now we could be seeing 58, 55 in this area here. So something to keep an eye on. Let's go ahead and just take a look at gold, because so many people are interested in gold. And as you could see with the gold here, we did get that crossover here. Let me put that crossover signal here so we could see it right there. And we did get that crossover here, which is not a good signal here. We're going to go ahead and just put our warning signal right there, right in this area. So here we are. We're now in the bearish tone here. Now, I'm not saying gold is going to collapse, but for now, for us investors, stay out of the market. Short term, for those that are quick see, you could see here we're getting whipsawed here, back and forth here, which is not a good sign. So best of all, just wait, let the market do its thing. Once we see the signals cross over again, then we'll go ahead and play it in. We may get another bounce up here, maybe up to this area here, just to fake out some people, and then continue on downward. Okay, and then finally let's take a look at the crude oil here, USO. The USO here, as you can see, we did get that bearish crossover right here in this area. Even though we had the bounce up here, crossover up in this area, broke up, but now it's the exit right here in the short term. So let's just step aside or get those inverse ETFs on the oil. Alrighty, so that's pretty much it for now. Hope everything goes well, and happy tradings, and just keep an eye on these videos. Thanks.